Hello, everyone. Giovanna here with Flow State Financials, and today I want to walk you through a great tool that Schwab offers, and that is their investment fees comparison calculator. So, you might have heard people talk about how financial advisory fees can really eat into your long-term investment growth. And it might be shocking to see how even seemingly small percentage points can really cost you a lot of money over time. A 1% fee for assets under management might not sound like a lot, but if you really dig into the numbers, you might be shocked to see that it can cost you hundreds of thousands of dollars. And this is by no means to talk you out of working with a qualified professional who can help you with your personal finances. But I do think it's important to look at the impact of fees so you know what types of questions to ask and fees to look out for. So, for example, I am currently looking for a financial advisor that I can just pay an hourly fee simply to give me advice. And then from there, I will go ahead and manage my investments directly. As I do more research and start to have meetings, I will make a new video with my findings and recommendations. So if you haven't already, please subscribe to stay tuned for upcoming videos. Okay, so let's check it out. Okay, so this is the calculator. It is totally free to use online thanks to Schwab, and I will link it in the description below so it's super easy to access. And before we dive into the numbers, I just want to show you a few real examples of different fees. So, if you like robo-advisors like Betterment, you can see that their fee is 0.25%. And that fee will decrease the more money you have invested with them. And you can see here that this fee gets you expert-built portfolios, ongoing advice, and tax-saving technology. Now, on the other hand, let's say that you go with a financial advisor at Edward Jones, for example. You can see here that the fee starts at 1.4%. Now, I know that might not sound like a lot, but we will test out the impact when we go back to the calculator. And then finally, for reference, let's look at an index fund through Vanguard. You can see here that their index fund that tracks the S&P 500 has an expense ratio of only 0.04%. Now, let's say you want to be a little more hands-off and go with a target date fund. Vanguard offers several funds, and you can choose the date that you would like to retire. So let's check out 2065 as an example. And you can see here that with this fund, Vanguard manages all of the rebalancing for you. So as you get closer to your date of retirement, they will decrease your exposure to stocks and increase your exposure to bonds. So if you want to be a more hands-off investor, this could be a great option for you. And you can see up here that the fees are only 0.08%. Okay, so let's plug this into the calculator. As a reminder, we have a robo-advisor like Betterment that charges a fee of 0.25%. We have an active advisor at, say, Edward Jones, for example, that charges 1.4%. We have an index fund at Vanguard that charges 0.04%. And finally, we have a target date fund also at Vanguard that charges slightly more at 0.08%, but still really small considering that they are handling rebalancing for you. So let's say that we want to compare a target date fund, a robo-advisor, and a financial advisor. We can plug in the three investment fees here. So we will do the 0.08% for the target date fund, the 0.25% for the Betterment robo-advisor, and the 1.4% for the Edward Jones financial advisor. So let's say that you are young, you're in your mid 20s, and you are just getting started on investing. And let's assume that you have $1,000 to contribute right now. You plan to invest for 40 years, and you want to contribute $50 per month. And let's also assume an annualized rate of return of 7%. And you can click here for more information. Okay, let's calculate. So basically, what this is saying is that if you choose to go with the financial advisor that charges 1.4%, rather than a more passive target date fund that only charges 0.08%, it will cost you over $40,000 over your entire investing career. And if you come down to this chart, you can see the impact of your balances over the years. So, for example, with your target date fund option, your balance will be about $136,000. With the Betterment robo-advisor, your balance would be around $130,000. And then with the financial advisor option, your balance will be $95,000. So this difference right here is the difference between the $136,000 that you would have with the target date fund and the $95,000 that you would have with a financial advisor charging you 1.4%. So now let's keep all of this the same and test out how this impact will change if we have more money to invest. So let's say that we still only have $1,000 to invest right now, but we've looked at our budget and we want to set aside $300 per month for the next 40 years. Let's click calculate. So now you can see that this difference went up to $216,000. And again, here you can see the balances for these three different options over the years. So with your target date fund, you would have a balance of $744,000. But with a 1.4% financial advisor, your balance would only be $528,000. Now let's play around with one more example. Let's say you are in your mid 30s and you have a bit more money to invest now. You're a bit further along in your career, maybe making a better income, but you have a shorter time period to invest. So let's say that you have $10,000 that you would like to invest, but you will only be investing for 30 years until you hit retirement. But you have been working on your budget and you have $1,500 per month that you would like to invest. You can see here that having that financial advisor will cost you almost $400,000. You would have 1.8 million in your target date fund, 1.75 million in your Betterment account, but only 1.4 million with that financial advisor. So I think that looking at examples like this and testing our numbers can just make it more clear that these seemingly small fees have drastic impacts over time. And it's important to see how investing in your personal financial education now can really save you hundreds of thousands of dollars over your life. You work hard for your money and you deserve to keep as much of it as possible to enjoy in your retirement years. And again, we all have different levels of comfort with investing. Some of us might love buying our own low-cost index funds in Vanguard and managing our annual rebalancing. Others might feel more comfortable with a robo-advisor. And some people just feel a lot more confident and comfortable when they have a professional to work with. So, by no means am I saying to not work with a financial advisor. They can be incredibly helpful to at least get you started with investing or to guide you through life's more complex questions or problems. But it is very, very important to understand their fee structure upfront. And ideally, you find someone who offers a flat fee rate or maybe just an hourly rate for advice. And again, I am on my own quest for an advice only financial advisor, so I will circle back with my findings. If you found this video helpful, I would be so grateful if you could give it a like and subscribe for upcoming content. And if you are just starting off on your wealth building journey, we have a free all-in-one personal finance tracker that you are welcome to download and customize to fit your needs. So I will link that below. As always, thank you so much for being here, and I'll see you in the next video. Bye, everyone.